Good afternoon, students. So, I hope you are enjoying the session, Audit Insights, right? So we are giving you insight into audit, bridging theory with practice, right? So whatever practical gaps we are facing when we are studying our theoretical subject, to make you understand that auditing is not at all theoretical, this initiative has been taken, and today's session is like we have already completed our preliminary engagement activities, audit strategy, audit planning and audit program, risk assessment and internal control evaluation, and also on audit evidence. Now, next is our substantive testing, right? And this is very, very crucial and important topic for which we have allocated 6 hours. So our session is divided into like 2 hours duration session we are having. So on 18 today we are having, then we will be having our next session on 21st and on 25th February, right? And faculty for this topic, as I already told you, it is very important and very crucial, as we are going to like have substantive testing, thereafter completion procedure. So these are very, very important topics which are covered in this session, and faculty is also very learned for that matter. If you see, we are having faculties here. Amit Kumar Rathod, he is a chartered accountant and director with SN Dhawan and Company LLP, that is Forvis Mazars in India. Over his 15 years career, he has handled numerous engagements on matters relating to statutory audits as per Indian GAAP and tax audit as per Indian regulation, audit as per IFRS as well as on US GAAP. He is having experience in offshore and client facing role with varied industries, service industry, manufacturing, finance, non-profit organization. He is also having specialization in audit and statutory reporting for India and overseas geographies, along with developing and leading delivery centers which provide tailor-made solution to the audit teams, resulting in cost efficiency and overall growth of respective organization. So as I already mentioned that he is having vast experience in audit. He is having vast experience in statutory audit, and in international and other work experience also he is having. So will request him to impart his experience, his knowledge with you, so that you can interlink all this with your theoretical concept and the issue due to which we started this initiative. We took this initiative to start with the series, namely Audit Insights, Bridging Theory with Practice. The reason was we were not able to interlink the theory with practical, and the result was in the paper we were not able to perform well and not score well. So to bridge that gap, this initiative has been taken, and that is the reason we are having a very learned faculty amongst us. And not taking much of the time, I request Amit ji to please take over and guide the students. Thank you. Over to you, sir.
Thanks a lot, ma'am. Thanks a lot for this wonderful kind of an introduction and setting up the right expectations among the students and me. So I think this is really such a beautiful gesture from the ICI side that they have started this practical session. And rightfully, I mean, this was an apt explanation whereby the students and the faculties have many times actually they approached me by saying that theory is something that they are not able to inculcate in their daily routine. This becomes boring when they are thinking auditing as a subject from a theoretical perspective. But when we started, especially when I started 15 years back, my journey as a qualified chartered accountant with one of the big four, I realized that this is not at all theoretical. This is absolutely a kind of a subject which is pure practical. It's the approach through which we are approaching various engagements, the level of risk, the identification of controls, mapping them to various processes. I mean, there is a lot that is practical. When I studied in CA final, and I'll be very honest because most of you must be from that particular level, it was indeed, it felt like it is a theoretical subject. There was no doubt in it, right? But when you enter into the practical environment, you realize that every single word that is written inside that particular auditing as a subject is practical in nature. So today, definitely one of the very important pillar I will say in the audit, which is known as the substantive testing that we are going to take ahead with. So this one of the very important uh, pillar which we are talking about, the substantive audit, is not at all kind of easy to handle. It's very one of the most exciting kind of a pillar in the audit, but simultaneously it is one of the most difficult one as well to handle. So we have in total 6 hours allocated, and there are so many sections, so many areas. If you'll talk about all the financial statement line items which are presented in your balance sheet and P&L, you need to test them from an auditor's perspective to get a comfort over those numbers. I mean, it is not going to be easy to complete all of this in the 6 hours of a session. You know, like the years of learnings, it is very difficult to impart in couple of hours. But I will try my level best to connect the dots, the gap. I will try to bridge it from the theoretical and the practical perspective. And how we are planning as an faculty of yours, I am planning to deliver couple of slides are there which are more or less covering some theoretical kind of insight. While explaining them, I'll give you the practical exposure, the experience that I had. Then I will also show you the templates that we are using, the audit work papers that we are using to document our testing, our procedures. Okay. So moving ahead, I just need a quick confirmation from anyone that my slides are, my PPT is visible. That's the only confirmation I need. Is it
Yes, sir.
visible? Okay,
Yes,
perfect.
yes.
Great. So moving ahead, right? So this is kind of an agenda for today's time. You see, when we are talking about 30 minutes or 15 minutes to these areas, which itself take days for each client to handle. I mean, when I'm writing down, let us suppose this test of details, in your articleship, you will realize that at least in the first year, most of the work that you will be doing is all around test of details, be it the purchase testing or sales testing, right? Most of the time that you'll be spending in the first and second year, that can be around the substantive analytical procedures. It can be procedures related to revenue. It can be related to OPEX, related to payroll. So there is a lot that you do in the analytical procedures. So obviously this 15 and 30 minutes, I'll try to share with you whatever or the best possible knowledge is. But yes, in the next session as well, which we are going to have on the Saturday, as explained by ma'am, we are going to cover the rest of the areas other than cash and bank and trade receivable, which we are targeting to complete during this particular session. We will pick up more FSLI line items and then see how to test them while you are an auditor doing audits of listed clients or public limited companies. Moving ahead, substantive procedure. So what do we understand by substantive procedures? That is very important to understand. So when I'll talk about the pillars of audit, there are a couple of things which might have already been covered in the previous sessions by different other faculties. But just to give you various pillars in audit. As an auditor, when we talk about pillars, the first is basically acceptance and the continuation procedures, right? Obviously, in the practical world, there is a lot which goes before acceptance and continuation as well. We need to do how to generate a lead, right? That's very important, very practical phenomena whereby you need to identify the leads. Then you need to identify the contacts. Just to give you an example, like if I am looking to increase the business of audit, I need to know that what are the clients who are due for rotation in upcoming year. For that, I might have to go through the MCA websites and the information which is publicly available. After that, I need to find the who can be the POC or the decision maker. For that, maybe I need to reach out to somebody in the accounts of that particular company, and then slowly have to reach out to the level of a CFO, or probably then finally with the board of directors who will be ultimate decision makers in terms of playing a key role when they are planning to appoint the auditors in the next AGM. So I mean, there are a lot which goes even before the acceptance and continuation. And it's not only that you are able to reach to the right decision maker, but it is also very important to do a background check of the company, of the KMPs, and all those things. The proposals, the competition, who are the competition, and this all goes before acceptance and continuation. Actually, the audit from the acceptance and continuation part, it starts from the moment that you are either offered by the company to be appointed as an auditor or you are appointed as an auditor. So that's the first pillar, acceptance and continuation. After that, the most important pillar in the audit is the planning. Okay. So audit planning is really key. there is a Chinese proverb which goes like, if you have planned well, then the 50% of the work is already done. So if you are not able to plan it well, you will face challenges at all the other parameters, all the other pillars, be it control, be it substantive, be it conclusion, or finally reporting. So this all is very relevant. The next after the planning that we call is field work, which can be divided into two parts. One is basically the control testings, right? Getting the comfort over the control, or like whether you will be able to place the reliance on the various controls that are there for respective ESCO tabs, or then you need to move to the substantive procedures, right? After the control. So once you have decided whether you can place the reliance or you will not be able to place the reliance, the next step is basically substantive testing. So while during the control testing, you will be thoroughly focusing on the controls that are there in relation to a transaction, whether the organization, they have designed the controls, they have implemented that control the way they were designed, and whether those design and implementation of the controls was effective throughout the year or not. So it shouldn't be like a design of the control was perfect. It was implemented for the part of the year, but it was not implemented for the complete year. So that's why in the control testing, we have various stages. It starts with like walkthrough. We have to understand the process of the clients. Then we go to the design and implementation testing, which is the test of one, and then the final is the test of the control, right? So, which may be depending on the frequency, you have to select your number of samples. But after doing the testing of control, you will be able to conclude whether you can place reliance on the controls or not for the areas of ESCO tabs. ESCO tab means significant class of transactions and account balances and disclosures. So we'll be discussing that as well on upcoming slide. But yes, that's the pillar which is known as the control testing. Once you are able to reach out to this stage, a conclusion stage of the control testing, now you have to come down to the substantive procedures. Substantive procedures means basically doing all the audit procedures to get a comfort on the numbers which are written in the financial statements. Okay. So when we are talking about the numbers, substantive procedure is there. When we are talking about controls, then control testing procedures are there. So on the screen, I hope you can see that what are the various types of substantive procedures. So like for substantive audit procedures, they are the tests that auditors perform to gather evidences about whether a company's financial statements are free from material statement or not. So obviously the evidences, but again, I'm being very kind of clear in my approach that substantive procedures are more or less around the numbers, while the controls testing is basically around the controls. Okay. In the substantive procedure, there are two types of procedures that we perform. The one is known as the test of details, and the other one is known as the substantive analytical procedures, which is SAP as well, right? Which is known as SAP as well in the audit practice. So, like when we are talking about test of details, it means testing a transaction with respective details. Okay, that's why it is called as test of details or TOD. If somebody is asking you what is a TOD, then it's the details testing for the respective transaction. So to do the test of details, you need to identify, you need to pick samples from the transaction registers to do the testing of those samples. That is the test of details. While when it comes to the substantive analytical procedures, all you need to do is to have the predictions or the predicted amount basis the base that you will be given. So we will be covering a lot of practical aspects, but yes, there are two basic types of testing under the substantive procedure. The one is known as test of details, and the other one is known as the SAP, which is substantive analytical procedures. Other considerations, okay. Now you see, when I was discussing about the ESCO tabs, this is the this is applicable. So substantive procedures, key requirements. So perform substantive procedures for each relevant assertions of ESCO tabs. Now I'm pretty sure this ESCO tabs must have been covered in the previous sessions on the audit insight. But ESCO tabs, just to give maybe a quick recap, the class of transactions are all the FSLIs, financial statements, line items, all those groupings of various account balances. Okay, the trial balance is actually a summary of all the accounts. So it shows the closing balance of all respective accounts. Now, when you are classifying these account balances into a group, like all the GLs related to expenses are being clubbed under the expense, that group is known as the FSLI. Now, these FSLIs which are present in your P&L, they are known as class of transactions because they are there for a particular period. But if that FSLI is presented in the balance sheet, then that is known as account balance in the audit. So when you are planning substantive procedures for account balances, it means you are planning audit procedures for the FSLIs which are in balance sheet. But if you are planning some audit procedures on the class of transactions, that means you are planning some audit procedures on the FSLIs, various financial statement line items which are there in the P&L. Same is with the disclosures. If there is any audit procedure that you are planning to perform on the notes to accounts where the disclosures are mentioned, then that is known as disclosures. So combinedly, balance sheet, P&L and notes, they will be known, the all FSLIs will be known as cotabs. So they are known as cotabs, class of transaction, account balance and disclosure. But any cotab, if that is, so it means if any FSLI which is material in nature, then that becomes the significant FSLI, significant class of transaction or significant account balance or disclosure, right? So we need to understand, or we need to perform substantive procedures only for the transactions which are significant in nature. So substantive procedures means test of detail or analytical procedure, and then you are not required to perform these procedures on all the FSLIs, right? So first of all, we need to understand what are the FSLIs in balance sheet, P&L, and notes, and then we need to identify whether they are significant or they are not significant. So any FSLI whereby you have identified a risk to a relevant assertion level. So each FSLI in the balance sheet and each FSLI in the P&L, right? You have to, the first thing you need to do is to identify if there is any risk related to any assertion which is there in the FSLI. And if you are able to identify that, then that FSLI will become significant class of transaction, account balance and disclosure. And if that is significant, you need to perform TOD or substantive analytical procedure over it to get a comfort. Okay, just to give an example, like if there is a cash and cash balance, equivalent account balance in the balance sheet, then that's just a co-tabbed. Okay, but if you have considered that there is a risk of existence, maybe the bank balance which is given in the balance sheet may not be existing in reality. It means you have a risk that you have associated to the existence assertion of that particular FSLI or co-tabbed, then that FSLI, which is cash in bank, will become a significant class of transaction, account balance or disclosure. Combinedly, this is known as ESCO tabbed in the auditing. So when somebody is talking to you about ESCO tabs, don't get confused. They are talking about the FSLIs which are material in nature. Okay. Again, the last line is very important. So it says that if there is a significant class of transaction, account balance and disclosure, you have to perform substantive procedures irrespective of the control risk assessment. So to identify how many samples you will be selecting while doing the TOD or what kind of analytical procedures you will be performing to get a comfort over that balance, right? When you will be deciding on that, you will consider whether controls are effective or controls are not effective, which I mentioned before the substantive testing. Ma'am, you want to say something?
Yeah, I just wanted to request you that you are very nicely explaining if we can interlink with your experience or some of the examples that
Yeah.
will make us students great learning
Yes.
experience. Yeah.
Yeah. So, ma'am,
Yes, sir.
I'm just coming to that. Just give me maybe 5-10 minutes. Give me the.
Okay.
Let me just explain the background. Basically, I'm not exactly sure in the previous session what is exactly being conveyed. So, I'm just trying to give the summary of what is happening before substantive procedures
No
happen.
issue, sir. We
Yeah.
have covered audit evidence in the previous session. But
Okay.
yeah, you can continue with that. And dear students, please understand because these are basic. And
Right.
as sir told you, after this conceptual clarity in 5-10 minutes, we'll jump to practical and we will understand the concepts with the help of practical examples.
Right.
Yeah, over to you,
Okay.
sir. Yeah.
Thank you, ma'am. Thanks a lot. So this is the, I hope now everyone understood what is ESCO tabs. Okay. So now the important points are basically that the controls, if they are effective. Okay. So let us suppose you have tested something and then you can see an organization is there where the controls are effective. So let us suppose in relation to cash and bank. Okay. So if in the cash and bank you are thinking that existence is a risk, but you realize that the controls on the bank reconciliation process, they are really effective. Okay, so in that particular case you may reduce the sample size for testing of bank reconciliation statement. Okay, considering cash in bank, we always consider it as a significant risk area, so we need not to do the sampling over there. But yes, if in case you want to do, then that is possible. So the controls, they will never eliminate the substantive procedure. They can only reduce the extent of substantive procedures. Okay. Now, what we do in the substantive procedures, these are basically, so I'm just quickly wrapping up to reach out to the practical aspects, how we do the audit in practical. So that's why the substantive procedures, they will cover like inspection, observation, inquiry, controls. These are the various things that you'll be performing. What are they? Basically, like for the inspection, this is examining the information, like you are inspecting an invoice that you have received for purchase. Observation is basically whereby you are observing an inventory count of the company, which the company is performing an inventory count, and you are present there as an auditor. Inquiry is whereby you are asking in return or you are inquiring formally, informally with the management. Confirmation we are going to cover in today's session in some time. Recalculation is basically, it may be like depreciation, which is created or calculated by the system itself, but you can still have the calculation of depreciation, right? And then you can do the comparison with the ledger balance. Reperformance, you're performing something on your own, and analytical procedures, which I discussed. So you are extrapolating your assumptions to reach out to a particular lesson. Okay. There are three things in the substantive testing, which is nature, timing, and extent. And I hope you understand all three of them. Nature means what is the type of the procedure. So we just had a couple of procedures explained in the previous slide. So you need to decide a combination of those procedures. That is what is nature. Timing is whether you are doing interim or year end. So interim is basically when you have 12 months of a period, but let us suppose you decide that for 9 months I'll be doing a testing separately than the complete year testing. So you will be rolling forward that 9 months of a testing and completing the rest of the year's testing. Extent is basically how much the sample size will be, how you are going to cover that sample size. Okay. Then we have substantive and range. So just in the interest of time, and since we all want to discuss a lot of practical things here, even though the slide is there, I'm not exactly sure if you will have access to it, but we will directly move to the practical aspects of different things. Okay. So like in the substantive testing, as I mentioned, assertions are the most important thing. So while doing the planning of an audit, so when you plan an audit, like when I plan an audit, how I do it, we need to understand that what are the material accounts, first of all. So once you have decided like PP&E is a material account, now this PP&E, which is a material account, you need to decide whether this is a balance sheet or a P&L line item. So when we are talking about the PP&E, maybe the block, the fixed asset, which is account balance item. But when we are talking about the depreciation, depreciation is a P&L account. So we need to see if depreciation is there, then these are the assertions which are applicable. And if the PP&E is something that I'm trying to test, then these are the account balances assertions. Now, how these assertions are practically being taken into account and how you are mapping them to the audit procedures that you are planning to confirm or to complete your audit procedures, that is really important. And that's the practical aspect that you all need to understand. Okay. So I'll take examples like I discussed and I told you in the beginning itself. In today's session, we are going to cover two FSLIs, right? Cash and bank and debtors. And in the upcoming sessions, we'll be covering more of them, right? And then we will be giving you the practical example. So you need to be very careful. I mean, out of my experience, what we have felt, and we'll keep on discussing about that. Like, let's discuss cash and bank. So when we are talking about the cash and bank substantive testing, we need to understand that cash and bank is an FSLI which is in the balance sheet. So it is a co-tabbed, again the substantive testing, while substantive testing. So this cash and bank as an FSLI item, since it is a balance sheet item, how we plan our audit procedures, that what are we going to what are we going to perform as an auditor, that will depend upon these assertions. So since it is a cash and bank is a balance sheet item, these are the assertions of balance sheet item. Okay, I will connect this to the practical world. How are we doing it? But at a planning stage, this is what I need to do as an auditor. I need to, for cash and bank, I need to write down the assertions and I need to write down a risk. In the auditing, the risk is known as what could go wrong, which is WCGW. So in the practical environment, what we do for the cash in bank, let us suppose existence. The risk can be that the bank account does not exist. Okay, but still that is there in the bank kind of a balance in the balance sheet. If you can recall in the certain case, what happened, the amount which was presented at the bank was not appropriate, right? The valuation was a problem. The accuracy was the problem, right? So what happened actually, uh, if you have followed this particular case, you will come to know that they created fake websites, right? So they took the money out of the company and then the chairman of the company, they invested it in the US market, in the real estate, because real estate was at a boom, right? So they thought probably they will withdraw some money from the company and then they will invest in the open market, will make more in returns, better returns than what the company is making on an annual basis. And then they will repay the money in the company account and will keep their share. This was the kind of a whole of a plan. And to do that, what they have done actually, they have uh, manipulated the books of accounts, right? Which means the existence was also a challenge in some of the cases that the bank account that they were showing in their books was not existing in practical. So how you can check whether this risk can be avoided, can be mitigated in audit or not, is the audit procedure. So if you realize that existence can be a problem in the practical world, maybe the bank balance which is shown in the balance sheet, it is not existing. So to avoid that kind of a situation, there has to be an audit procedure. So we finally decided that what we will do, we will send a bank confirmation. So earlier a bank confirmation could have been sent by the client as well. So you are asking the client to send the bank confirmation and the client was receiving the bank confirmation and giving it to the auditor. It means it is more or less like a kind of a dependent confirmation. The client is involved. And if the client is involved in that kind of a situation, they can manipulate it. So in the practical world, we are not doing it any longer. We are not asking the client to send those confirmations. Instead, what are we doing is that we are asking the authorization letters from the client, and along with those authorization letters, we are sending the confirmations directly to the bank. And when we are sending it directly to the bank, we are requesting the bank as well to send those confirmations back to us directly, not to the client. Okay, to avoid these kind of risks on ground. Okay, in one of the client that we were working, I mean, we found out that the bank accounts which were closed, right? They were also still shown as active in the on the balance sheet date, which means these were the fictitious accounts which were continued in the books and books were manipulated. So this all you will come to know when you will decide to send the confirmations to the bank. Okay. Completeness can also be a problem. Whether bank accounts that are shown in the balance sheet, they are complete or not, there is a probability, right, that the client may have provided a kind of a bank account or they have not written or shown a bank account which is existing in practicality. So in those cases, what is happening? Maybe those accounts are being used to manipulate funds, right? And if that is the case, we need to have a clear understanding how many bank accounts are there. For that, what you need to do to ensure that completeness is that you are going through thorough. So like we have mentioned an audit procedure, review of bank confirmations and inquire about all bank accounts. So confirmations, okay, one of the audit procedure, This audit procedure can be there, mitigating various risks. It's not necessary in audit that for each risk you have to identify audit procedure. Okay, like when you are sending a bank confirmation, the bank confirmation itself is giving you comfort on two, three assertions. Like it can help you identifying the completeness as well. It can help you identifying the existence as well. Okay. So in one of the audit, I can recall what happened actually at the initial stage of my career. I was doing the audit of one company, and while doing the bank account scrutiny, so this company, the accountant was from the Big Four, the background was from Big Four, so they knew that the auditors generally they will, since it's a balance sheet item, cash in bank, they will do the audit procedures on the closing date. Okay, so they knew that as an auditor, we will be sending the confirmations for a particular bank to confirm the bank balance. So what they did, and I can recall when I'm talking about this, what happened? They withdrew some amount. The amount was around 65 lakh rupees, and it was deposited to another bank in Mumbai. Okay. Now this transaction happened somewhere in May and June. And what happened, since they were aware that the auditors will check the closing balance on 31st March, the money was deposited back into the bank account in February somewhere, which means a transaction happened, like the debit of the in the bank statement happened in somewhere around June, and the credit again happened in February, just before the audit, knowing that we will be sending the confirmation as an auditors. And since the closing balance is intact, we will get the confirmation from the bank, and there will be no impact in the audit. The accountant was trying to save some interest income over this money. So that money was there for 7, 8 months in a different bank account, whereby he earned some money. This is the exact thing what the Satyam CEO also tried to do, right? If you can recall, they withdrew some money and invested in some other place, thinking that they will beat the return of the company, and then they will deposit the return to the company's bank account with a kind of an intention, making some money, but not creating any losses to the company. But what happens? Market is not in your hand. Like Satyam, economic recession came in and it got blasted because the market was not able to pay back the returns that was expected. But in this case, the client that I'm talking about, the client was able to get the money of 65 lakh rupees, and it was deposited back into the bank account. The transaction, the circle was completed, and the bank confirmation, even though we sent it, we were able to receive the bank confirmation with the closing balance. But as an auditor, it was a risk of, if even the bank FD was there, it was 6 to 8% of the interest on that bank FD for 8 months. Okay, so you need to be very careful. And how we got to know about it? It is not only a bank confirmation, but we added one audit procedure, which is which was basically doing the bank scrutiny of all the transactions that were happening in the bank account. And then we realized that this is one transaction which was squared off from June to February, but it was not shown in the bank confirmation. So completeness, we have accuracy again, whether this is there is any error in the recording of receipts or payment, or it is not, right? Like when it comes to the accuracy, uh, I have the in the kind of a theoretical environment. I mean, you all must have heard this, that there are various types of opening or reconciling items which are there in the bank reconciliation statement. Okay, so like it is mentioned, what is the audit procedure we'll be performing to have the accuracy? We'll be doing a reconciliation of the cash book with the bank statement. But now, while you are doing it, in the theoretical environment, we have heard multiple times that there are various types of reconciling items which are present. You may have, to give an example, like bank interest directly given by the bank in your bank account. You may have the interest or insurance premium debited into the bank account without you realizing it. Or maybe a customer directly depositing some money in your bank account, XYZ thing. There can be multiple things which can be in the BRS. But in the practical environment, that is not possible. Okay. In the practical environment, as an auditor on one of the clients that I can recall, what happened when I tested the bank reconciliation statement, I could see that there is a bank interest and there was a bank charge as well, which was there in the bank statement. but it was not in the cash book. So what the client actually did, client opened them as reconciling item and prepared a bank reconciliation statement. Okay. But, and me as an auditor, I ended up checking it. I was like, yes, it is absolutely fine because bank statement has bank interest and bank charges. The problem was when I sat with my seniors for reviewing, to get the work paper reviewed, they asked me that this bank interest and bank charges can be in the theoretical world, this can exist, but in the practical world it is not possible because this is the income or the expense of the year for which the audit is going on. So if there is a transaction which is a part of the bank reconciliation statement, but that transaction belongs to this particular year, right? Instead of putting this in the reconciling items, what we need to do is to test it, to record it in the books. So then we went back to the client and then we requested the client to pass this accounting entry, matching up or increasing or decreasing the cash book balance, which ultimately was in reconciling with the bank statement, and those transactions went out. So theoretically, there can be a lot of transactions in the bank reconciliation statement, but practically only two types of transactions can be there, which is check issued but not presented and check deposited but not cleared. And these both of these transactions are also possible because of a timing difference, right? And then at times, practically, again, when I'm talking about this, I have realized that the companies at times they are taking the benefit of this being in the reconciling item. So what happens? Just to give an example in one of the practical scenario, so the company issued couple of checks, right? But they were never given to the vendors. They were never given to the parties which were intended, which was supposed to receive. So they just created some checks and then put it in a different drawer, right? And then they marked the accounting entry in the books of accounts, showing that they have paid it, right? So in that case, what happened actually in the bank reconciliation statement, since the cash book balance is now reduced because of issuing of those checks, which are with the company in their drawers itself. But this was never presented, so the bank statement balance was higher. And in those cases, what happened? Uh, a bank reconciling or an reconciling item was there in the bank reconciliation to match it up. When we inquired, the answer was pretty much simple that, sir, we issued the check, but the client has not presented, so it's not our fault. Our cash balance is reduced, the bank balance is reduced. Now you see, this is actually undervaluing the creditors. This is at the balance sheet date. You are just trying to reduce a liability which is still in existence on the balance sheet date because you have still not repaid it. But since it is allowed or it is very much practical that check issued uh, and not presented can be part of the bank reconciliation statement, the client actually went ahead and booked it. As a practical example, what we do. So while let us suppose the March is the year end, we wait for a couple of months and then we need those checks to be cleared. If the client's deadline because of the listed arrangement or something is let us suppose April end or mid-May, what we request the client is to either clear those checks, make the payments, and those checks should be debited in April or somewhere so that we can actually see that a real entry is there in the bank statement. If not until 31st March, then at least in the subsequent period, which is the April and the May. Okay. So we do the subsequent testing. In the audit, we call it subsequent testing, whereby we ask the bank statement for April and later stage till the time the audit report is not signed, and then we try to quickly check whether these checks are subsequently cleared or not. And if they are not subsequently cleared, we ask the clients to reverse these accounting entries. Okay. So this is how the accuracy is checked in the practical world. And then we do have cutoff. Cutoff is an example that I just took, whereby the checks were issued, but they were not actually issued. They were just issued in the books. So if they were not subsequently cleared, we we reduce. And to do that, we can pick up some transactions at the end and the before, starting of the year and at the end of the year. How to there is a very practical question, and then we generally ask this in the interview as well, maybe for the benefit of everyone. So when we talk about cutoff, a very simple question is how many days of cutoff should be taken? So we know that the transactions which are being tested, you have to take couple of transactions at the year end and then subsequently for the beginning couple of days. But what is that couple of days? Someone answers like 3 days, someone answers like 5 days, someone answers like 10 days. But how we calculate this 5 days or 10 days as an auditor? So for this, you need to understand the business of the client. You need to understand the business cycle that is related to cash in bank. Okay. So if there is a business cycle, let us suppose if there is a payroll processing which is happening, and the client knows if there is anything that is processed on 31st, they will be taking only a couple of hours to clear. Then if you really want to check, then you can take up those transactions which were processed, let us suppose at the afternoon or at the late on the last day of on the balance sheet date basically, because this is couple of hours only. But if there is a transaction which takes up to couple of days, so you need to understand if you are giving a check to someone, that check will be cleared in 3 days or 5 days. Then 3 or 5 days will become your cutoff testing period. That's how you decide cutoff period in the cash in bank. So on the slide that is presented, I've given you a couple of examples that what we faced in the practical world. But just to summarize, this is at a planning stage that we need to decide what are the procedures we are now going to perform. So what we need to do is to write down all the assertions for each FSLI during the substantive testing. We need to map these assertions to the risks, which is known as WCGW. So these are the risks in the audit for these assertions. And then we need to decide how we are going to perform the audit procedures. Okay. In one of the client where fraud was detected, you know what happened? I'll give you a little background. So in this client, we were the auditors, and this was a microfinance company. The microfinance company used to give a lot of loans, okay, to the self-help groups. I hope you can understand. Self-help group is a group of ladies at various village levels. I mean, small group of 4 5 ladies, and then these companies who are especially in the microfinance companies, they were giving the loan to these self-help groups. The ultimate purpose of the loan was so that this group of ladies can start some source of income, maybe by purchasing a, let us suppose just a buffalo to sell the milk, or maybe having a cart to sell the vegetables and all. So there was small amount of loans that were given to these self-help groups, and then they were requested to deposit not equal monthly installments but equally weekly installments, EWIs, in the bank account. Now, you see, in this practical environment, was what was happening, even though there was a lot of debtors, they were there, right? The transactions were happening in thousands. There were thousands of debtors all across those groups. But when we decided that we'll be doing a confirmation testing, the confirmation was becoming very difficult for us to achieve because of the customers, they were not, the borrowers, they were not that educated. So when we used to send the confirmations, even if they used to reach out to them, there was a very rare possibility of getting the confirmation return or revert on those confirmations. Same thing was happening because the company was doing this fraud intentionally, and that's why it is a fraud. So what was happening? Company was aware that as an auditor, we will go and check the bank confirmation as well. Okay, so we'll not believe if the company will show us that 100 rupees are there in the bank, which is deposited by that is suppose one of the self-help group. So they know when once we will circulate the confirmation, the reward that we will get from the bank, it will definitely show that the amount is not deposited. Okay, and in that case, we will go back to that particular borrower's account and we'll see whether the EWIs are deposited on time or not. And if EWIs are not being received on time, that particular account will become non-performing asset. Okay, which will definitely impact the goodwill, the credit rating of the company. It means the banks and FIs will not give them more loan. So they came out as a solution, and you won't believe this happened in the practical environment, that they asked their peons or their branch managers at respected cities to deposit EWIs on behalf of borrowers just to keep them as performing assets. So the fictitious borrowers were created, how they pulled it off actually. So they used to go to various self-help groups. They used to ask a lot of KYC documentation around it. Those KYC documentations that they were asking, they at the last stage after doing the completion of all those KYCs, they used to refuse these self-help groups that they will not be able to give the loan. Now, since self-help groups, they are not that educated, they used to leave those KYCs with the company itself. A company used to create a copy. They used to create a borrower's file, which was, I will say, more than accurate than the original borrowers as well at times. And then they used to appoint a person to open a bank account using those KYCs in the bank, right? And then they used to disperse fake loans in the bank. Now, the particular person, the office representative, they used to withdraw the money from that bank account, making it a real transaction, and then they used to deposit EWIs every weekly basis into the bank account. Okay. I mean, you see, even if you are sending a bank confirmation and getting a bank confirmation will not give you that level of comfort, whether the bank balance that exists, which is in existence, which is complete, but now, whether it is accurate or not is something that we need to challenge. I mean, so practically it becomes very difficult. Even if you are sending a bank confirmation, there is no guarantee that the balance that is there in the bank, whether that bank balance is deposited actually by my customers or it is just a fictitious customer that has been created and the company has deposited it. And we have faced it practically. I mean, we have burned our hand in that kind of an instance, and we have to revise our audit report. The case became from a statutory auditor to kind of a forensic, a fraud investigation, right? But it happens practically. I mean, we have to be open from all perspectives. But saying this, yes, in the audit planning, you need to do this, that whether this is existing or not, complete, accurate, or cut off, right? And these are the audit procedures. So when somebody says sending a bank confirmation seems like theoretical, I mean, it's not theoretical at all. When you are sending a bank confirmation, it is a practical exercise. You're getting a response from the bank. You need to track that. You need to match it up with your trial balance. You need to see whether there is any difference, yes or no. And then if there is any difference, you need to inquire. You need to check the bank reconciliation statement. If there is any reconciling item, you need to do the subsequent testing. I will show you a template as well and how we do it, but you need to remember all these kind of processes or the words that I just used with my practical example, because I mean, when we hire people, this is something that we generally ask, right? Rights and obligations and the valuation. So there is a possibility, like there is something restricted, some kind of balances which are not disclosed by the company. So the company has shown that these are the,
Sir, we have received a query from a
yeah,
student. He's
yeah.
asking up to what extent we should rely upon the voucher signed by the management in case of non-availability of original bill.
So we should not be actually, like in the environment that we are actually, practically you see if there is an invoice which is missing. First of all, it's not a practical scenario, right? If that invoice is so important, you can always have a duplicate copy from your vendors or from wherever the invoice is, right? That's a request that you can always have. The second thing is if something is being signed by the management, it's never something that you should be placing a reliance upon. Okay. So even if the client is suggesting that that particular invoice was missing, you can always send a confirmation. Even if it is not like a physical confirmation, I will recommend you to send a email confirmation. Okay. But in the audit kind of an environment, the management representations, including this kind of management voucher signed by a management representative and giving it to you as an evidence will not be considered as an evidence. Okay, so you have to, in those cases, you need to come up with alternate procedures. In the auditing, we call them alternate procedures. So if invoice is not there, it's absolutely fine. Can you have a confirmation over a mail or somebody? At times I have seen if the amount is not that material, you may have a call confirmation as well and record it. I mean, depending upon the amount of that invoice, you can have alternate procedures. Okay, ma'am. Did I answer? I
Yes,
mean,
sir. Yes, sir.
is
Yeah, yeah,
is
yeah, yeah, yeah.
is there any other question? Not yet.
No, no. Right now, so Sumit has asked this query, which I have posed, and
Okay.
I think today we have brought some practical this paper documents also, na, which we will be
Yeah,
showcasing in the
we'll be
session.
showing.
Yeah, yeah, yeah.
I'm
Okay.
just giving them a kind of a practical flavor that what are the challenges that we are facing and then how we are responding to those challenges. And I hope while listening to me, you all can connect. I know it's kind of a, I mean, I'm just trying to put you in that situation, which is pretty much visible because I was there, I've experienced it. But I hope whatever way I'm explaining, you can also visualize that situation and you can be there practically, like how the frauds are happening or as an auditor, what level of challenges we are facing. Even in the
Right.
even in the most simplest again believe but this is what used to happen that if we were not able to receive a confirmation because of any xyz reason, we used to sit with the client and then we used to ask the client to show us the bank balance in their bank account by opening their bank account on the website of the bank, right? And then we used to take a screenshot of it. This was a practical kind of a stage that we used to do. But later on, when Satyam happened, and then we realized that considering an IT company is there, they created their own website, which was just a replica of any original bank website, right? Just to give an example, a nationalized bank was there, and then they created a fake website of that nationalized bank. And when auditors used to sit with them, they used to open the home page of that nationalized bank, which was just a replica, and then they used to show the bank balance which was there in the balance sheet. And the auditors used to take the screenshot and to rely upon that this is the bank website, right? So nothing can wrong can happen. And you know what happened later on. So there was a guidance which came up from ICI side only that to avoid such instances, we should not be relying on any dependent confirmations. If client is sharing something with you, that is something dependent. Client is always in a position to modify to change that. So you should be, if you need a confirmation, send it directly, right? Which is independent confirmations. So we are not asking the client now, right, to send the confirmations on our behalf. Instead, what are we doing actually? Instead, what are we doing actually that we are sending it directly to the bank. But when you are sending, bank may not respond. So what we need to do is to ask for the authorization letter. That's also a request. So what are we doing? We are asking an authorization letter from the client that please authorize the bank up to us to reach out to bank and request the bank to directly send the request to us. Okay, so in that authorization letter it is mentioned. Moving ahead, like cash confirmations, I think this is again very theoretical, but we have kind of discussed this all in very detail. Trade receivables, the way I just explained you about the bank, the same situation is for the trade receivables as well. Okay. So like for trade receivables, the account balances which are outstanding at the balance sheet date. Since it is again a balance sheet account, all we need to do is to map the assertions like existence, completeness. That's why you need to have a thorough understanding of assertions. Because at the planning of the audit, all you need to do is to decide what are the audit procedures you are going to perform on various FSLIs. So like trade receivable is one of the FSLI. Again, financial statement line item. So trade receivable is an FSLI. Then for a balance sheet item, these are couple of assertions that we need to test. Like existence. We don't know those borrowers for that microfinance company, which I just took an example for. We don't know whether those were impractical. They were existing in existence or not, right? So what we did, we used to send the external confirmations, which is mentioned here. Now I will tell you the practical challenge. So when we are sending an external confirmation to the borrowers, and these borrowers, they are not that educated. So when they used to get a confirmation from our side, they used to think there is some kind of a legal letter they have received, right, from some court or somewhere. They used to get panic around, and instead of reverting to us to confirm the balance or the loan amount, they used to go back to the branch asking why this letter is there or what kind of letter is this. And the branch, since this was kind of a joint fraud that was happening inside the company, branch was already aware that this kind of a procedure will be there. And then branch used to send the confirmation on behalf of borrowers to us. Now you see, it means you are getting the external confirmations revert as well from the company, from the borrowers. It means you are in comfort. You are as an auditor very comfortable that you are able to get the revert from the customers. And on the other side, I just mentioned, even if you want to check the bank balance, whether this particular borrower is depositing or not, the company was depositing the fake EWIs, equal weekly installments as well. Okay, so that was becoming more challenging for us. Ma'am, do you have any question?
Yes, sir. Sir, we have received a question. The student is saying, thank you, sir. I can see that whatever you are discussing is linked with practical aspect as well. I
Okay.
appreciate that. How can we confirm that the bank statement received from the bank is correct? And Hima, SA 505 we are taking after this, right? And trade receivable will connect it.
Yes,
And
we are already
sir,
doing that.
yeah, yeah, we are doing that. And
Yeah.
with practical examples also, we are interlinking. Sir is explaining with the help of practical example itself.
Right. And that's
Yeah.
not practical example, to be very honest, ma'am. This is what happened with me. So I will not say an example, it is a life experience, I will say. Right. So we
So
are
you
not
are
just
sharing
experience, yeah.
your experience itself, that
Yeah,
whatever you have faced during the audit, that
exactly.
you
So
are
this is
sharing with.
I'm
Yeah.
just because of the confidentiality, I cannot tell the name of the clients. Otherwise, these are
No,
all
no.
practical, real life examples. So when I'm saying that this
Right.
is happening, an audit being converted into a fraud investigation, this is exactly what happened. Because what started as an audit couldn't be concluded as an audit because of these reasons. So when we are sending the confirmations, that is not there. To answer to the query that the student has asked, so the answer to that query is basically, you see, now we are not relying on any dependent confirmation. Dependent means if a client is involved in between in any manner, then those confirmations are not there to get a comfort upon. Okay. So what are we doing? We are sending the confirmations from our office. Okay. It's the only authorization letter which the client is signing, because if we are writing directly to the bank without an authorization letter, bank will never revert to us, because you see, bank is also bound by the privacy and confidentiality kind of agreements. They are not supposed to tell your account balance to anyone, be if that guy is an auditor, right? So what we need to do is we need to have an authorization letter attached to our confirmation request, and then we are sending it directly to the bank address. Okay, and the confirmation that we are receiving, right, that is coming directly from bank to us, giving us a comfort. So to answer, even the envelope in which we are receiving that particular confirmation is also a proof and evidence for us, and then we need to scan that letter, that from where that letter came, what was the courier agency who delivered it, and whether it came directly from the bank or not. In the cases where we have doubts, you won't believe what happened. It is very practical that we do it on daily basis for especially bank confirmations. If we have doubts, or we are not able to receive a confirmation, the balance sheet and the financial statement cannot be signed. We hold the signature till the time we have all bank confirmations. To expedite that process, at times we send our audit teams along with the client personnel. Both of them will go to the respective branch, and they will sit with the branch manager to get a in-person physical form of confirmation. Okay, that also happens. Okay, so that's how we rely on the confirmations, whether they are received directly from the bank or they are not received from there. I think Sumit asked this question, but I hope, Sumit, you got the answer. So I can move forward. But that's the practical thing that we do.
Yeah, Samyanathan, I hope you have got your answer. Earlier question was of Sumit and now it's of Samyanathan.
Okay.
So I think we have covered, yeah.
Yeah. So Swaminathan, that's the practical scenario. So we send our audit team member along with the client personnel to the branch to collect the physical confirmation, or else we send from our office, not from client's office, directly to the bank, and we receive it directly from the bank without any involvement of client. In the audit, they are known as the direct confirmations. Okay. So, like in the trade receivables, in the same manner, and that's why I thought cash in bank and trade receivables, both of them should be covered together. Both are balance sheet line items, and both have the similar kind of procedures to perform and the assertions which are there. So I gave you an example like existence, even if you're sending the external confirmations, how difficult it can be to get a revert. Even if the reward you are kind of receiving, it is also becoming very challenging. And see in this example, what you can do if you want to take a comfort on the let us suppose these balances that are a balance sheet date, you can send the confirmation, right? We send the confirmation. Now this group, they were not practically or that educated, so they reach out to the branch send the confirmation to the auditors on behalf of borrowers. From an auditor's perspective, they are not aware that the branch is sending confirmation, so they have actually completed a procedure which was mitigating the risk of fictitious debtors. But again, fictitious or inflated debtors, but the branch was involved, so it was not a kind of a independent confirmation. From an auditor's perspective, it was independent. It was a direct confirmation because they were not aware. Now, even if you have some doubts, to gain more comfort, you know what you do? You do alternate testing, right? So if you are not receiving a confirmation or you are not comfortable with the confirmation that you have received, you will check the alternate procedures, which is testing invoices, testing agreements, or at times doing the subsequent collection testing, which means, and this is a very important, right? That's a procedure that people will ask you even if you'll come or face interviews. You know, like this is a favorite question when we ask all articles or even to the qualified members when we hire them, that if you are sending confirmations and you are not able to receive the revert back, what will you do in those situations? The answer is very simple. We'll move to the alternate procedures. Those alternate procedures may be checking the invoices, checking the bills, right? And then the most important alternate procedure in this trade receivable thing, when you are not receiving a confirmation back, is the subsequent testing. So you will check subsequently. So if you are giving your audit report for the financials ending on March, let us suppose 25th, what you will do till the before till the date of your audit report, you will see how much the total collection you have received from those customers who were material for you or for whom you sent the confirmation. And let us suppose the balance sheet amount was 100 rupees, and in the subsequent period, you are able to receive a confirmation, this particular collection of 70 rupees or 30 rupees. You need to see how much amount is left and whether that is material or not to extend your subsequent procedures. Okay, so if 100 was the amount and you received 30 rupees subsequently, you need to see 30% collection is there. Still 70% is you are not comfortable about. So for the remaining 70%, you need to pick up some invoices. Invoice level testing will be there. You may need to pick up those agreements, those contracts which you have with the customer. You may need to check the sales order. There are a lot of things. They are known as the alternate procedures to get a comfort on. Okay. This is all about existence when it comes to trade receivable. Completeness can also be a very big challenge, right? Some receivables are not recorded. Remember in audit, when we are talking about assets, the overvaluation of asset is a very big problem. Even though we talk about misstatements in audit, so we don't talk about understatement or overstatement, we talk about misstatement. But from a management perspective and from an auditor's perspective, you need to know that the assets are something where a bigger risk is around overstatement. So people like management generally would like to show over when it comes to trade receivables. So when I'm talking about the completeness, the major risk is that there are some receivables which are not in existence, which is the fictitious one. So I will do my audit procedures on completeness as well, but for me, major risk is the existence. But if it is trade payable, now you see, considering the liability, management would always like to undershow, undervalue the liabilities, right? So it means there might be some liabilities which are not recorded in the books. And there is a very important audit procedure that we need to perform known as search for unrecorded liability, okay? Which we will cover in the upcoming session when we talk about trade payables, right? But over here, yes, completeness, we take whether the receivables are complete or not. If you are aware, it happened with one of the big four. Again, I'm not taking name, right? There were a lot of debtors which were fake. This was the case of Reebok and Adidas. I mean, pretty much open case. I'm just taken two brand names so that I'll not get to the exact name of because of the confidentialities. But if you search, you will find it. that there were a lot of fake customers that were booked for such renowned brands as well. Okay, so they created another company with a different name, and then there was a lot of sales that was happening from this company to that company, which is just like a sister concern or like a window dress company. So as an auditor, what will you do now? So there is another company, right? We always come around these kind of instances. There is another company which is showing you, asking you to deliver some goods. This company for which you are the auditor, this company is selling to another company. Now, as an audit procedures, what will you perform? You will be sending the confirmation. You will get the confirmation because it is my company only, right? The other company. If you will be checking the subsequent payment, you will get the subsequent payments as well, right? Because that's my company. I know the audit procedures. So I know you will be checking the subsequent. So I will ask the company to make the payments as well. I mean, everything will be happening. So just imagine a company which is there, they are booking fake sales to a related party kind of a company and then getting kind of a payment as well on time. You are an auditor only. You cannot establish any connection between your company and the other company where sales are being made. The company is also not reporting this under the related party transactions. So because it's not related, it's just a distant party, which whereby maybe not directly but indirectly controlled by the company. Now all the procedures that I'm talking, they have their own practical limitations, right? So even if you will be sending confirmations, you will receive the confirmation, you will check the subsequent payment receipts, you will get the subsequent receipts as well. And that's why we say that auditors, I mean, the audit is there, which is the fraud detection mechanism is not covered under audit. Audit is a reasonable assurance. It's not a certification. That's the only reason. Because we just cannot establish these kind of connections until or unless we didn't come across a kind of a document or the client is not explicitly telling us the related party relationships. It will become very difficult for us, right? So that's why reasonable assurance is the term which is being used, and we don't talk about the certifications and all. That's why an opinion is there. You see, audit opinion. We don't say audit certification, right? Because the audit comes itself with a lot of practical challenges. They are known as the inherent risks, if you have kind of heard these terms, right? So completeness, obviously, we need to do the reconciliation of the sub ledger and the GL. You know, like when I come across it as a first time that the sub ledger and the GL should be reconciled, I thought probably like in the accounting software, the total is 100 in the GL. Then if I'll extract the report, the sub ledger, it will automatically show us 100 rupees, right? So why do I need to reconcile this? You know, until or unless I reach out to that stage whereby I was handling a MNC client, a very big client, and you won't believe there were more than 28 ERPs, that applications that were used to record the transactions. There were more than 150 legal entities spread across the world, and then there were multiple applications that were used. And there was only one single ERP in which all those sub applications, I will say, they used to get compiled. And then from that ERP, if you want, you can extract a compiled report. So when you are taking the trial balance from that particular ERP, you can see 100 as the accounting balance for the debtors. But when you are going to the sub-ledger reports, you may have to ask a sub-ledger report for each application. And if let us suppose at the end of the day, you ended up getting the reports from 28 ERPs, but in the main ERP on the balance sheet that you are going to sign, if they have 29 ERPs and you missed anyhow that one ERP, then you will not be able to, I mean, place enough reliance to give the correct audit opinion. So in those cases, you need to, the first thing you need to do is whenever information from your client you are getting, the first thing you need to do is to completeness. Or always match that information with the trial balance, with the ledgers and all. That's the first step before you go and do any sampling or place any reliance or do any kind of procedures. Okay, completeness is the first step. I mean, initially I've seen there are a lot of people who make this mistake. They get the information from the client and then they run the sampling tool over that. They end and actually they ended up having certain samples from that information, but at a later stage, they realized that the sub ledger that they received from the client was not complete. It was not matching with the trial balance. And you know what happened? Then they have to again run the sampling on the complete sub ledger list, which is a lot of efforts and time is being wasted. So if they have already shared those samples, the earlier samples to the client has given some evidences. I mean, if they will come across at a later stage during the review that the information was not complete, and now when they are running another again the sampling tool, the samples are different. So they are going back to the client and asking for a kind of a again the second set, the evidences against the second set of samples. I mean, this is damn difficult. Client will not entertain this. Okay. So completeness is something that you need to test. Accuracy, whether the invoice amounts are recorded correctly or not. Right. So we will be doing a kind of a transaction level testing, which I told you invoice testing as well that you can do. Cutoff. Okay. This is very important because sales is always, I mean, the management is always under pressure. Okay. So there is always kind of, as an auditor, you have to have that kind of a mindset whereby we call it like skeptical mindset. What is this now? That you can trust blind, but blind trust shouldn't be there. Trusting and then blind trust. This is a kind of a different thing, right? In the audit, we always say that the like absence of evidence does not mean evidence of absence. Okay. So absence of evidence, it means if you don't have an evidence that the fraud is there, does not mean that the fraud is not there. Okay. So that's a very key principle of auditing. Absence of evidence is not the evidence of absence. So we need to see that a fraud can happen when there are three things. If three things are existing, kind of in as a group, as in kind of in the process, if three things are visible, you can see there are three things that are happening, you need to be very careful because there is a high probability of fraud is existing. What are those three things? The first is that the management is under the pressure or is getting some incentives, right? So if you can see there is a sales target that management is running around to achieve, there is a high probability that they will put some fictitious sales. And if even those sales are real, I mean, what happens? They take the advantage of cutoff. So let us suppose if there is a sale which happened on 31st of March, but the rewards, risk and reward got transferred on 1st of April. So ideally, from an auditor's perspective, there should be a sale in the next year, right? But because management is under the pressure of achieving certain targets, because I told you the first element of fraud triangle is incentive or pressure. So what they will try to do is basically they will try to prepone the sales. Instead of booking in the next year, they will book in the current year. That's why cutoff becomes very important. So when they are booking into the current year, now the debtors will also increase. So while doing that cutoff testing, you need to see if there is any sales whereby the risk and rewards are transferred maybe in the next year, then you have to push them for the next year, not for this year. Okay. It means all those sales where the transaction shouldn't be recognized as a sale, you have to do a cutoff testing and you have to go back to the management asking them that these are the sales you need to reverse from the books. They are not for this year, they are for the next year. So the first is basically pressure and incentive on the management. And that's why cutoff is required. The second is basically if the management has any opportunity to conduct a fraud. Now coming back to control testing, right? Why do we do control testing? The reason is very simple. That is the management can override controls any point of time. That's a fraud risk. That's a very significant risk for us. To avoid that, we do the control testing and then we test that the controls are good. They were not only designed good, but they were implemented as well. They were not only implemented, but they were operating effectively throughout the year. That's why you do design and testing, implementation testing, that is known as test of one, and then you do the test of operating effectiveness, which is the test on the operating effectiveness, whether the complete year, full year, those controls were working or they were just implemented before the auditor came to do the testing. Okay. So that's known as the opportunity. So if there is an incentive or a pressure on the management to achieve a record, or let us suppose there is an opportunity because the internal controls are not that strong. And the third thing is basically rationalization. So the culture, the organizational culture, the financial statement closing process, the entity level controls that the company is having, whether they rationalize this kind of behavior. I mean, what are the kind of consequences if a fraud is happening? How frequently the fraud is detected? The people who are in the key managerial positions, what is their background? Have they been involved in any kind of smaller or a bigger fraud in the past? I mean, this all comes back to rationalization. So if there are three things that you can identify, there is a high probability, a very high probability that a fraud is existing. Okay, those three things are pressure or incentive. Second is basically opportunity, internal control. And the third thing is basically your rationalization, the background of the management.
Sir,
Valuation,
Geeta,
yeah,
Sir,
yeah.
Geeta is asking, in
Yeah.
case of this type of window dressing, overstatement of assets liability, which is not detected because of sister concern, for which auditor is unaware for that, which audit procedure auditor has to do, and which audit evidence he has to collect and verify.
Okay, so Geeta, I told you, I mean, this is a very practical kind of a challenge that as an auditor we face. Not all the transactions are true, but there is no procedures as well from an auditor's perspective that you can perform to identify those transactions. And that's why frauds are happening, right? So if you come across the fraud instances, you will realize the fraud is something which is very difficult to detect while doing the audit procedures. Okay. What we do, we obviously, this is what I told you, the improvements in the audit procedures are continuously happening in relation to the practical world. Whenever there is something which we realize that the auditor could have covered because of any XYZ, let us suppose procedures, then we add that as a guidance. The ICI will issue a guidance, or the let us suppose international standards on auditing they will get changed, or standard on auditing will change, right? So that is. But in this kind of an equation where the fictitious assets were created, right? It becomes very difficult, but you are not also supposed to do the testing or to identify those kind of frauds. You are only supposed to perform the audit procedures with professional due care. But if all the professional due care and the guidances that you have available, and after that, if you're not able to identify the fraud, that's why I told you, then the auditor is not at fault. Auditor is only on fault when there is a proof that the professional misconduct or professional negligence was there, that you did your auditing, I mean, not in accordance with the standards or guidances that you receive. Okay. But if you have performed it and still the fraud remain undetected, it's absolutely okay. I mean, it's obviously it's something beyond your control, right? So that happens. I mean, what I can recall, like again, one of the property company that we were working on that, I can't take the name, but you see, in Delhi NCR, it's a very practical kind of a experience that we have. It becomes very difficult to even buy a flat, right? A normal flat as well without a black money. I mean, it shouldn't be the case, but it is very practical to speak about. So we know at times, like from our conscious or subconscious mind, I will say that if a property company is dealing into the kind of, like transactions of land acquisition and all with ministries and with a lot of farmers and all, what is happening. So we know from subconscious mind that it's a very risky transaction. There must be some cash embezzlement or some black money rotation or something must have happened. But as an auditor, you are not there to kind of challenge on all those things. So if a transaction, just to give an example, I'm giving you more kind of insight so that you can relate to the transactions. Like I gave this one example of a fictitious sale. In the same manner, just imagine, right? Let us suppose your client has purchased a building, a floor on a building. Okay. Now this floor, this could have been in the open market, maybe available for 5 crores. But when the sales deed was signed, it was signed with 6 crore rupees, right? Obviously, you are an auditor, these kind of transactions are happening, and you're not supposed to go to a valuer for doing a valuation for all the assets that the company is purchasing. That's a practical kind of a limitation, right? You cannot go to the valuer. So what will you do in this deal? You will see that an invoice was, so there was a sale deed which was signed with 6 crore rupees. What if your client has actually taken some portion of that extra 1 crore rupees in cash from the other company? There is a possibility. But the problem is, as an auditor, your limitations are there. So what do you when you see? You will see the sales deed is there for 6 crore rupees. You will see that the transaction, the stamp duty, etc., is paid at 6 crore rupees. You will see that the bank statement of your client is debited with 6 crore rupees, right? Or the bank book is credited, whatever it is. But the point is basically there is a practical limitation to everything that you are doing. And that is what, I mean, as an auditor, we always say, be skeptical. So those transactions that are happening, which are window dressed so beautifully, that does not seem like there is a kind of a fraud is happening. There can be, there still be a chance, right? So be vigilant. And that's what, when you will go to a couple of slides back, you will realize that I did mention that substantive testing is a combination of various audit procedures. They can be inquiries, they can be observations, they can be recalculations, recomputations. So depending upon how big the transaction is, whether it is material or immaterial, you need to decide whether you want to extend your audit procedures or not. Okay. So like if six crores, if I'll tell that this is beyond my materiality, I mean, that's a material transaction for me. I may decide to perform additional procedures. I may ask the client that I'm not comfortable with the sales deed amount, or probably I just need a valuation report. But if it is an immaterial, which at times the companies that are being handled, right, running into I mean, multiple countries, having so many product lines, so many segments, I mean, thousands of employees. I mean, these kind of transactions may come as very immaterial kind of transactions. Okay, so that's why the auditor is it's not a bloodhound, right? It's just a watchdog. You must have heard this line as well. Okay, so Geeta, did I answer? I mean, if you have a subsequent question, I can definitely take that up. Is it okay, ma'am? Should I? Yeah.
Yeah, Geeta is saying thank you. And another Saminathan is asking, there is a
Mhm.
Caro clause one talk about fixed assets has to be valued by registered valuer, and discrepancy 10% or more has to be reported for each class of assets if Caro applicable.
So, Saminathan, this is an audit procedure. That's what I'm saying. But do you think for every fixed asset which is not in material in nature, right, we need to do that? So my point was, if it is immaterial, we might not even think about it. But if it is material for us, why not? That's what I said. Go back for a valuer, and you won't believe even if the valuation report is there. How do you know that cannot be manipulated? I'm just giving you some practical aspect because there is limitations to the practicality when it comes to audit as well. And that's why I again, like maybe when the audit evidence or audit documentation kind of topics were discussed, somebody must have told you that the audit documentation should be apt and accurate to an extent that an independent auditor, when they are going through your audit documentation, they will also conclude the same kind of conclusion that you have given on the financial statement, right? So if your audit documentation, the testing of audit procedures that you perform, they are not commensurating with the audit opinion that you have given, then that's a professional misconduct. Okay. But if you have performed it, like in Caro as well, you have performed the valuation, and if there is anything which was beyond 10%, and then you're reporting it, it's okay. But believe me, even if you are reporting it, the transaction has happened, right? And if there was a kind of some level of fraud happened in that transaction, it is already done, right? As an auditor, you just by doing reporting, you have confirmed that this is something. Now the stakeholders should consider this particular statement, right? It's not like that you have identified a fraud or something. You just cannot conclude like there is a fraud. Okay, Samanathan, is it clear now? Can I move ahead? I mean, Samanathan, if I answered your query.
Yes, Saminathan has written, okay, sir, got it.
Yeah, perfect. Moving ahead, so this is, I mean, trade receivable we are saying, so valuation, uh, obviously, so cutoff, I think it is clear to you guys. But again, I'm reiterating, cutoff is a very important area when you will appear for interviews, be it as an article or as in qualified, in both the cases. People, the favorite question is, how do you decide for how many days of cutoff you need to test? Like for sales, right? So somebody says that I'll test the last 5 days transactions or the early 5 days transactions. The first question is basically why five? Why not seven? Why not three? Why not 10? Right? The answer to this question is basically the cutoff depends on the cycle. So what is a sales cycle? Maybe when we am talking about sales, I need to identify the not only sales, but I need to identify the business processes. Okay, like in this, the revenue as an FSLI in the P&L. If you practically see, this may have multiple quotabs. What is quotabs and FSLI? Nobody asked, but just to enlighten you guys more, an FSLI is what is mentioned in the P&L. So revenue is mentioned in the P&L is a financial statement line item, but this may not be the class of transaction also, right? When we discuss class of transactions is a group of similar items in the balance sheet, in the P&L class of transaction and account balance related to balance sheet. So when I'm talking about the class of transaction, this may be different. So when I'm saying FSLI of revenue, then revenue may not have COT, class of transaction also. I mean, one class of transaction. There is a possibility that there are more class of transactions in one FSLI. So let us suppose revenue is one FSLI, but there may be two class of transactions. Just to give you an example, like there is one online sales and then offline sales. So we have online sales through which the sales are happening, and then we have offline sales as well through which the sales are happening. So there are two class of transactions because the procedures, the process that we are following for both of them may be different, right? For while the offline sales may have instant selling as a class of transaction, but the online sales may take some time. So now when I'm doing a cutoff, since I know for offline sales, it is kind of the customer is coming on the shop and then they are getting the billing done at the same instant kind of a moment, they are taking away with the goods. Now I may check the transactions which are happening at a kind of a last stage only for a couple of hours only. Maybe I will take 1 day as my cutoff procedures. So I will only test for the class of transactions which is offline sales only for that day which happened at the closing day. But when I'm talking about online sales, so let us suppose the customer is placing the order, I'm giving this order, and the risk and reward is with me till the time customer is approving that. Now let us suppose this whole process is taking 5 days. Then I will have to test all the sales which the company has booked for online class of transactions in the last 5 days. I hope I'm clear, right? But if it is taking 7 days, I have to extend the cutoff period to 7 days, or I can reduce it to 3 days. But there is no, I mean, universal kind of a check. Generally, I've seen in the audit, people take 5 days without even writing why 5 days is the right kind of a audit procedure. And if you will come across, you will face the regulators or any internal review, people will definitely ask you, how can you justify this 5 days, right? And that's why it is a favorite question of all the interviewers as well. Okay, moving ahead to the valuation, inadequate provisioning for doubtful debts. Yeah, so valuation may be incorrect, right? So provision for doubtful debts. I mean, I don't know, is it like funny or it's a very practical thing? But you know what I came across again, a very big group, very big good group in FMCG. I was the auditor. So I was practically doing the audit and then I realized that in the profit and loss account, there is a bad debt amount which is shown. Okay. Now as an auditor, what will you do? You will realize that bad debt is there. So I asked the company to show me the relevant documentations, how they finally concluded that bad debt is there. Okay. So they given me the court order and everything, the full and final settlement, and then they finally told me that I mean this is the reason, this is why the bad debts have been recorded in the P&L. I mean, I was new to the audit, so I believed in the sense I obviously tested those documents, evidences, and then I realized the calculation is correct. And I was fine. I was okay with that amount, whatever the amount was there in the bad debt, in the books of accounts. Now, when I sat for review with my partner, and this is another big four that I'm talking about, I mean, you won't believe what happened. The first question when my partner looked on that bad debt number was that why bad debt is there. So I gave him an example, right? That for this particular, let us suppose debtor, 100 rupees of the debtor was there, and then we created 20% as the provision. But finally, the final full and final settlement happened at 30 rupees. Just to give you an example, right? So 70 rupees of the a kind of a loss was there, but the provision was only for 20 rupees, right? So what happened? 50 rupees came to the P&L account as bad debt because it was over and above the provision amount. While I tested the 50 rupees and I was pretty comfortable about that 70 rupees, the partner was also comfortable about this particular transaction. But the point was the first question which came from the partner, how do you know that the provisioning policy of the company is correct? So when the full and final settlements are happening and the customers are not ready, not able to pay more than 30%, then doing the provision of 20%, do you really think there is any logic around it? I mean, if your provisioning policy is correct, then what is the benefit of having a provisioning policy? That whatever losses are happening, they will set off from the provision. Nothing will ever come to the P&L account as bad debt. Okay. So if there is a bad debt in the P&L account, it means the provision that the company created was not sufficient enough to set off the loss that the company is having on the debtors. So instead of being fine with the calculation of the bad debt, he asked the CFO to revise the policy to provide us as an auditor justifications why the provisioning policy should not be challenged. And we were like, no, we won't accept to the provisioning policy because the bad debt is there, so you should increase the provision. And increasing the provision means more expenditure to the P&L account, reduction in the profit. And you see, I just told you, the management is always under the pressure to increase the upline and bottom line. Sales and profit they're always kind of very concerned about. Because in most of the scenarios, their promotions, their increments, this all will depend on or multiple management. It's not only finance, right? It's everyone. Like in sales, you go in purchase department, production, quality, PP&E. I mean, you talk about any department, the numbers will tell how much of them will be promoted, how much of them are going to get the increment, what is the bonus of this year, everything. So everyone is very concerned about these numbers. The moment you will ask them to put or increase the provisioning policy, they will start questioning. But we are the auditors. We don't answer in those cases. We ask them to justify. You know, the numbers are there, bad debt is there. You tell us why the provisions should not be increased. I mean, I'm just giving you an example how small amount in the of the bad debt in the P&L can challenge the whole provisioning policy of the company. And I'm talking about a very big group here, right? So numbers they are running into, if not in billions, then in millions at least. Then the rights and obligations. So even if this is receivable, but is it like, is it your receivable or someone else, or have you factored it? Factoring is a very kind of a common procedure whereby you sell your debtors, especially in the banks or NBFC kind of a model, whereby if let us suppose I have a debtor from whom I'm supposed to receive XYZ amount, I've given loan to someone, borrower is there, and I'm going to get that loan repaid back maybe in 5 years, 10 years, 20 years, but I need some money on an urgent basis. What I will do, I will go to a factoring company. This factoring company will buy the right to of future receivables from that borrowers and will net them off at some discounting and provide a lump sum amount to me. So if I have done that, I mean, there is a settlement of the debtor has already happened. It means I am not supposed to show that trade receivable in my books because now it is an asset of that factoring company. So what I need to do, I need to push that trade receivable out and I need to do a settlement around that. But if that trade receivable is still shown in your balance sheet, this is kind of an overvaluation of the assets, which is another audit risk. So in those cases, you are supposed to check the factoring agreements and all, and you need to be very careful. I mean that's how the rights are being decided. Whether you have so even if the numbers are there, even if you send the confirmation, there is a high probability you will get the confirmation back, right? So you need to be very careful. The confirmation that you are receiving, whether you have a right to receive or you have already sold that right to someone else, especially in the trade receivables. Okay. Oh, I think time is flying. We have last 20 minutes. So I'll encourage, I mean, while we are trying to discuss a lot of practicality here, but if you have any questions, I'm all ears. I'm really happy. So we can do that. Okay, so moving ahead. Yeah. Yes, ma'am.
Yeah, there are no questions. You can move ahead.
Perfect. So moving ahead, you see external confirmations. I mean, this is all theory now. So to be very honest, I started trying to cover this, but on the suggestion of ma'am, I moved to the practical aspect. So this all is written to you, but wherever I'll feel like practicality is something that I need to be explaining, I'll try to quickly cover. I told you the external confirmation procedure whereby you need to take the authorization letter from the client. Always remember, because without that, the bank will never send you a confirmation. They are bound by a confidentiality agreement. Okay, they are not supposed to share the account balance of their customers with anyone, even if you are the auditors, without authorization of client. Forms of confirmation. I would like to spend some amount of time over here because it's an interview question, to be very honest, right? For us, even it's not only interview. When we work internally with the team, we keep on asking these questions. So different types of confirmation, right? I'll divide the types of confirmations into three parts. The first is whereby we discuss about a direct or an indirect confirmation, right? Or dependent or independent, whatever you call it. So when we are talking about direct or indirect confirmation, as I mentioned, if you are sending it directly to the customer and receiving directly from the customer or bank or lawyers litigations, I mean there may be various types of confirmation. Okay, you may send confirmations to banks, to account receivables, to accounts payables, to lawyers, right, solicitors, to check if there is a contingent liability or any provision required to be placed in the books. You may send it to the intercompany balances. You may ask required to do a related party transaction confirmation. You may want to send a confirmation to the employees to get confirmation on the assets that they are holding or the advances which are given in your books. So there are a lot of kind of confirmations that you may come across. But all these confirmations can be divided into various types. First type I am telling you, a direct or an indirect confirmation. So when you are directly involving with the party, it is a direct confirmation. But when your client is also involved in that whole process, then that is an indirect confirmation. We should not be relying on the indirect confirmation. We should be avoiding that. Okay. The second type is basically positive and negative confirmation. A positive confirmation whereby you are requesting the customer or anyone to whom the confirmation is sent to revert back. Then that is the positive confirmation. A negative confirmation is you are asking the client to revert you back only when they don't agree. Just imagine. It means if they are not sending a confirmation back to you, you are assuming that the client is agreeing, right? So that's a very difficult, I'll not say difficult, but this is very kind of a like unacceptable method. So negative confirmations are not at all acceptable. The way I told you, the independent confirmations are something that should be the priority. Dependent confirmation shouldn't be taken. In the same manner, a negative confirmation should be avoided. Okay, ma'am, you have a question?
No, sir.
Okay. Then the positive confirmation request is simple. So positive means you are supposed to revert back. Then we have blank confirmation. So in the confirmation, they can be open or close. Open means blank basically. So in the blank confirmations, you are not writing the balance. Okay, you are just sending a confirmation. Like when you're sending to the bank, you are saying, please confirm how many accounts are there and what is the balance in that account. Okay, so that is an open confirmation. But the moment you are writing that I want you to confirm that these are the three bank accounts on 31st, let us suppose March, this is the balance, and I want you to confirm whether this balance is correct or not. That is known as close confirmation. I mean, obviously, you don't want to disclose that information to the customer or the bank. You want the bank or the customers to revert to you so that you can identify whether completeness is there or not. Because if you will be writing down those numbers, the people may confirm on that number. you will not never come to know if there is something which is not uh, completely disclosed in the books of accounts, right? So in the audit, while three types of confirmations are there, one is dependent, independent, the other one is positive, negative, third one is open and closed. You are requested, you are advised always to go ahead with, first of all, open confirmation, second is positive confirmation, and third one is independent confirmation. Okay, so all three
Uh,
in one call. Yes, ma'am.
yeah, sir, one of the student is saying, could you please share the practical difficulties faced while performing negative confirmation?
Okay, so I gave you an example. I think if you have heard about this particular one microfinance company. So I told you there were a lot of borrowers, okay, of the company which were not that educated. So there were self-help groups that were created. Now, when you are sending a confirmation to borrowers and you are mentioning that you can revert only if you don't agree with the balance. Now you see, the borrowers may, because of XYZ reasons, because of the practical implications, they are not supposed to kind of revert to all requests, right? So they are not sending requests. It does not mean that they are agreeing to the balance that is there in the books, right? It is like, like I'm just dropping you a message saying if you will not confirm, or let us suppose if you can only confirm when you don't agree. So I'm writing in the message and I'm writing it is a negative confirmation. Please confirm me back only if you don't agree. And I'm writing that you owe me 1 lakh rupees. Now, what if you are missing that particular message? What if you are not reverting to that message because you just ignored it? And at a later stage, after 2 months, you are getting a legal notice from me that you owe me 1 lakh rupees and you need to repay. And then you'll be like, yeah, I don't owe anything. And then I'll be like, but you didn't send a confirmation. Because if you were not in agreement, you were supposed to send me a confirmation. You'll be like, like, what is this kind of a behavior? This is illogical. I mean, this is not practically possible. So when we are planning to send, we never send in negative confirmations, to be very honest. It is it is kind of restricted. You're not supposed to send negative confirmations. That's what I'm saying. Send positive confirmations. Okay. If you are not getting a revert to a positive confirmation, then you need to move to the alternate procedures, which I told you. They can be subsequent receipt testing for debtors, maybe, or subsequent statement checking from the BRS, whatever way. Or you can go back to the invoice testing, to the agreements testing, everything. Always have positive confirmations plus alternate procedures. Never send negative confirmation because not getting a revert can never be a agreement. It can never be a yes. I hope now it is clear. If it is clear, we can move ahead. In simple words, negative confirmations not allowed.
Sir, I believe you brought some confirmation request samples also.
Yeah, I was just trying to move there. I'm happy. There's a lot of interaction that is happening. I'll quickly
Yeah, yeah.
jump to that part. I
Huh,
think
so if we can share that and we can make it link with this,
okay.
yeah.
So, and I'm not sure, ma'am. Is it like they are going to receive this PPT or they will have access to this PPT as well? I'm not
No,
sure.
we are not uploading right now, but if
Okay.
it will be, we will. Yeah,
No, no worries, no worries. So you see, I'll show you a couple of things because we
yeah.
are, I think, in the last 15 minutes. The session started really slow, and thanks to ma'am for pushing it towards the practical aspects. But I think it was helpful.
So we can zoom in. Uh,
Yeah, that's what I'm doing, right?
yeah,
So
yeah, 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 yeah.
you see, so this is the confirmation request, right? This is just a kind of a example, a draft that I'm showing you how to send a bank confirmation. Okay. So we are writing this is a bank balance confirmation. We are writing it to the bank, right? So name of the bank we are writing to the manager. That's what I was telling. We are directly sending it to the bank. Okay. This is the date, and we are writing, dear sir, in connection with the audit of our financial statements, please provide directly to our auditors. What is this? This is an authorization letter, okay, that is received from the client. Okay, so in the confirmation, client will also be signing, but this signed confirmation is something that we will receive from client and then we will send it to the bank directly. No involvement of client. It is only the authorization is required, otherwise bank will never respond back. They will never send it to us. So the client is authorizing to the bank, but we will be sending it. So the client is saying that in connection with the financial statements, please provide directly to our auditor XYZ, who need to obtain the particulars of account balances, bills and other informations requested in annexed sheet as at the closing this December or March, whatever the closing, as shown in your records. Request is you to email us the scanned copy. So they are asking for their records as well. Post the same to their office address. So this is the office address they are supposed to bank is supposed to directly write to us. Okay, the partner and the director. Your prompt response and all this. This is the authorized signatory. So the client will sign so that bank can directly send to us. Now you see, this is what I was talking about, open confirmation. So this is a direct confirmation. We are sending it directly and we will be receiving it directly. And this is along with the direct confirmation, it is a positive, it's a positive confirmation because it is clearly mentioning that you need to revert back to them. It is never showing or it is not mentioned anywhere that if you not send, we will consider this as confirmed. Okay, because that is not allowed. So this is a direct confirmation. This is a positive confirmation, and this is an open confirmation. Open means we are not writing down. So current account in credit. We as an auditor, we can write down the list of the accounts as well, right? Along with the balance and ask the bank to confirm. But we don't do that because then that will become a closed confirmation. We want it to remain open so that if I am aware only about two banks, I want bank to note down all the relationship that the company has. They may have some bank accounts, they may have some investment accounts, they may have some borrowings, they may have some bank accounts which are leaned because of XYZ reasons. So I don't want the bank to be restricted to what I know, but I want bank to give me all the details that they have with the company. So that if I am missing on something, I can cover that as well. So I'll write down everything, right? Any loan account, fixed call, investments, margin against, bill for collection, and whatever the amount we will receive from the bank, we have various ledgers and then we can cross check. Okay, so this is how we send the confirmation. This letter will go to the bank account and then bank will be sending this letter to us. And I am again reiterating even the envelope that we are going to receive is also something that will become part of my audit evidences. Okay. And how I track the confirmation. So there may be, I mean, when we do the audit, just imagine if I'm talking about a company with 150 legal entities, only for bank, right? So 150 legal entities, if each legal entity has 2 to 3 bank accounts, just imagine we are sitting at around 450, 500 bank accounts that we need to send the confirmation. Only if we are talking about bank, right? So we need to have a tracker, right? What is the GL code for that bank, the bank name, whether we have sent the confirmation or not, whether the confirmation is received, what is the second or first reminder date. So if we send the confirmation, let us suppose on 10th of April, just to give an example, first reminder should be going after a week, after 2 weeks. Second reminder should also be going. We need to keep a record, right? In some of the cases, you will realize they maintain the POD as well. So when I'm sending the confirmation, I need to write the proof of delivery as well over here that it was delivered, right? Then what was the amount in the GL, if in the foreign currency and the INR, what are the different currencies? And then what is the confirmation? If I have received the confirmation, what is the confirmed balance from the bank? And if there is any difference, I need to have that difference column as well, which I'll be inquiring with the client, right? If the bank is correct and the balance in the books is not correct, then either a reconciliation with reason will be there, or I will ask the client to correct the books of accounts. So this is how you take a control over the confirmation process. In the same manner, if you see, there is a cash and bank work paper that you need to have to take the complete control on the cash and bank. You see, it's not easy. Again, I'm saying it is practical, very much practical. There is no theory. Then when you're studying about a bank confirmation is to be sent, you saw the whole format. I mean, it takes time. People at times make mistake as well. In the same manner, I told you it's not only sending a confirmation, but having a tracker. There are thousands of confirmations which are being sent. How much replies you have received? What are the replies that you need to send again? I mean, there are so much things which are practically happening every day. So you see, this is the index. That index means what are the various tabs and their explanation. Okay. So this is kind of a summary. So if you click of somewhere, you will reach there, and on a respective tab, whether you faced any issues or not. So that is just like a summary of the whole work paper of cash and bank. Then you see lead sheet. What is a lead sheet? It is the portion of bank from the trial balance. So whatever is there in the trial balance, let us suppose 10 ledgers are there. You are making a summary of those 10 ledgers over here. That is known as lead sheet, right? This is the year-end trial balance. You compare. So we call it a PAR kind of a performing analytical procedures at a starting stage itself. Preliminary analytical review. So you are doing a comparison, and then if you have any reasons, you can mention variance and then the reason column as well, if there are apparent reasons, right? Then we have, this is the lead sheet again. So what is the GL account number? What is the balance that we have, right? And then we need to come back to the respective banks. Okay, so this is the reconciliation. What is the GL account number? What is the bank account number? Bank name? I mean, what is the balance in foreign currency? Balance in our currency? And what is the difference? These are known as reconciling item. I'm again reiterating there can only be two types of reconciling item: checks issued and not presented, and check deposited not cleared. Anything other than that, be it bank interest, directly deposited into the bank by the customer, insurance premium debited, that we study in the theoretical kind of environment. Practically none of that is possible, because if that is happening, those are the transactions for current year. So instead of parking them in the bank reconciliation statement, I'll ask the client to make the entry. And if they will make the entry in the books of accounts, the number, the closing balance of the books will increase or decrease accordingly, and it will match with my bank statement. So only difference that can still remain is check deposited or check issued, which I told you. If subsequently they are not cleared, you need to reverse them as well. Okay. So we call it subsequent testing. So you see in this, we document the subsequent testing as well. What was the balance, right? This is the reconciling items. And then we do the subsequent testing as well. You see, posting date, document date, reference, amount, subsequent. So you need to maintain all this to check the reconciling item as well. So when you're handling a cash and bank section, I'm being very honest, at times you will come across such big clients that there is a team, the whole of a team is working continuously only on one section, which is cash and bank, right? At times, there is a client that I'm handling right now. There are 4 or 5 people who are only working on cash and bank, and then they will keep on working, I think, more than 6 months or so on this one part only. The client is so big with, I mean, more than 50, 55 countries, so many foreign currency balances. I mean, it is not easy. At times, you will realize you are dealing with such organizations which are outsourcing these processes, cash and bank, to Accenture or Genpact kind of organizations. And then when you sit with Accenture and Genpact, you will realize there is a team of 200 people, 250 people who are just doing the bank reconciliation for this MNC. I mean, practically you will be really very excited when you will get into the practical environment. But yes, so this is how you document, and this is what is audit documentation, which I think ma'am mentioned. There was a session on audit evidence that happened. So this is what my audit evidence is, right? If I cannot do, again, I told you one principle in audit, which was absence of evidence is not the evidence of absence. Okay. It means something is not there. You don't have a proof that something is happening, does not mean it is not happening. A very, very important principle. In the same manner, there is another principle which is even more important than this principle, and that is known as not documented, not done. So in audit, we always tell our, I mean, team members, don't tell us, show us. Okay, so if you have not, and you are not able to show that you have done this, then you have not done this. Not documented, not done. So don't talk to me, don't tell me, right? Come and show me. So if you are saying, Amir, I have tested the bank reconciliation statement, I'll be like, okay, where is the paper? Where is the evidence? Show me, how have you done it? And even if the formatting, you won't believe. I mean, even if the background is not white, even if the color codes are not matching to the brand colors of my organization, I'll be sending these documentations back. I mean, I don't care, because you see, Bill Gates once mentioned, and I really appreciate it when he said, if you cannot make things good, at least make them look good, right? So that's also what audit documentation is all about. Okay, in the same manner, I have two, three templates, but I have already shown you for cash and bank, so I'll take only 2 minutes to spend on the receivables as well. And as I mentioned that these are only two sections that I'm covering today. And I told you substantive testing is the major portion of the auditor's time is goes into the substantive testing. Okay. So it is not easy to cover them up in 6 hours. Like we only covered two things without reading slides. Just imagine. If I would have gone through all the slides, maybe 2 hours, I was just reading around. So you see, in the same manner, it is the debtor's confirmation as well, whereby you're just mentioning the information is tabulated above by client's name is correct. So this is what your auditors will be signing, oh, sorry, debtors will be signing, that whatever information is given above is correct. They'll be signing it and then with a rubber stamp. In most of the cases, debtors, I mean, there is always a gap reconciling item, so they don't share this confirmation, right? They sit silent basically, and that's why you need to move to the alternate procedures. And that's why it is not recommended to send a negative confirmation, which one of the students asked me. Okay. In the same confirmation, I told you, I have shown you how to maintain a confirmation tracker, a kind of a track of AR or confirmation. Okay, so I'll not be covering, showing you that because that's the same which we have covered in the bank. Now this is like for the BRS and all, we have a work paper template to document it. In the same manner, we have a template for trade receivable. I mean, so we have templates for everything. We call them standardized templates. So if we are handling 500 clients, any client that you will pick and you will ask us the documentation, it will be standardized throughout. That's what we achieve. I mean, this trade receivable work paper will be almost same for all the clients. Obviously, the balances will be different, clients will be different, everything, but and this is how we maintain. So this is a sub-ledger reconciliation, which I told you, right? 28, 29 sub-ERPs summing up to one ERP. And then if you'll miss on something, you will miss on one of the very big sub-ledger maybe. Credit balance, if in the debtors you have some credit balance, you need to reclassify them, right? There may be some advance received from customers. You just cannot net it off from the trade receivable balance. So at the balance sheet date, you need to kind of reclassify them to maybe liability accounts. Sub GL reconciliation, and then if there is anything in terms of valuation. I mean, there is a lot that we can discuss, but I think because of the limitation of time, we need to stop today's session, cash and bank and trade receivable here. I hope it was insightful and it was helpful. I tried my level best to show you the practical exposures. I'll go back to ma'am to kind of conclude today's session. Thanks a lot, ma'am.
Certainly, it was a really insightful session. Of course, students are more interested when you were showing those practical examples, external substantive testing, documentation, as rightly mentioned by you, that if there is no documentation means no audit. So auditor has to maintain the documentation. Whatever substantive testing has been done, they have to document so that they can showcase it. So dear student, I really enjoy this. I hope you also enjoyed. So your feedback is very crucial and important for me, for board of studies. So request you to please share your feedback on the session and how we can make it more interactive or more live, right? So your feedback is very, very important because we are having best faculties among us who are having vast experience, very learned, right? And they can, in fact, if you will ask any doubt, they will definitely resolve that also. So we need two support from your side. One is you have to read the theoretical concept, because if you have read, it will be easier for us to move, jump to the practical examples more and make it more interactive. Secondly, your feedback. What is your feedback for this initiative which board of studies has taken, right? I hope we are able to bridge that gap, because some of the students are of intermediate level, they are just reading theory they have started with, and some of them are of like final level also. So we are having final students also among us. So maybe they are in the beginning of the like articleship period, or those who are going for their articleship, because it's very interesting and interactive. Rather, I'm telling you, I enjoyed,
Mhm.
because it was somewhere I was also feeling ki, yes, I am going for audit, and now I have to do this. I have
Right.
to check in this manner, and these documentation, like this documentation is also important, so I need to document that also. So
Right.
same way for students, yeah, I'm now receiving feedback from the students. Thank you, certainly very useful, enjoyed from beginning. So dear students, once again requesting you to share your feedback, and if you are through with the theoretical concept, the session will be more interesting. Otherwise, some of the time will be your like you are reading, you are understanding, and then you are interlinking with the practical example. So, very thank you, Amitji, for this wonderful session. And we are having our next session again
Yes.
on the substantive testing, because as sir told us, this is very vast topic,
Right.
and in the limited time duration we have given this challenge to sir to complete the same, right? So of course we will take feedback of sir also, and your
Right.
feedback also, that what you additionally want, and we will try to add some more time duration to the topic. And thank you very much, sir, for this wonderful session. It
Okay.
was really indeed a very great learning for myself and students. We will be again on 21st February continuing
Yeah.
this topic, substantive testing. And as you have already mentioned today, what we have covered, so I request students to please go through these concepts.
Yeah.
Right now, it is available on YouTube, so you can review, you can again see, and you can revise the concepts. And on 21st February, you can bring your
Uh,
doubts. You can definitely ask your doubts. And anything, sir, you want to advise
just
our
a
students
small
for next
request.
session? Yeah.
Yeah,
Yes,
small
sir.
request, because now I'll be there for remaining two sessions on substantive testing as well. And
Yes.
I know, like when you are reading, or when you are listening from the trainers, at times you don't come across all the questions that you have, right? So you may, like when you will start grabbing what is being discussed, you may come across certain questions, and take the liberty of asking them at the beginning of the next session itself on Saturday. We can start with your questions and answers if you will have from today's session, right? That will be the starting
Right.
point for the next kind of session. That's it from
So this
my
is,
side for today.
yeah,
Thank you, ma'am.
yeah, this is homework from sir side. So if you have any doubts, if you have any queries, so please on 21st February, first like 10-15 minutes, right, sir? We will give to your queries, and then we will move forward. So for that, you have to do this homework, right? Read the
Yeah.
theory, link it with practical examples sir shared, and
Hmm.
if you have any feedback, do share it to us. Thank you very much. Once again,
Thank
I'm
you.
thanking to Amit sir from the Board of Studies ICI side. Thank you to the students, right?
Thank you,
And
ma'am.
thank you to the technical team and BOS. Thank you very much. Thanks a
Thank
lot,
you.
and looking forward to see you all on 21st February, 4
Sure,
p.m.
ma'am.
for
Thank,
substantive testing session.
thank
Thank
you.
you.